If you had $500 to invest today, SpaceX feels like a certainty. It is the primary platform for the next century of orbital development. They turned single-use, multi-million-dollar pieces of hardware into reusable assets, proving that rockets could land back on Earth and fly again. Their long-term objective involves establishing a permanent, self-sustaining human colony on a neighboring planet. That ambition is supported by a significant financial milestone. They have successfully lowered the cost of orbital launches by almost 85%. Based on that track record, SpaceX appears to be the most capable aerospace organization ever established. While the launch pads tell one story, the pre-IPO paperwork prepared for Wall Street investors reveals a different set of corporate priorities. In these mandatory filings, the company is officially classifying itself as a data and computing business rather than an aerospace firm. The global leader in rocket technology has explicitly disowned the space company label in its legal documentation. It raises a question: why would a company distance itself from the industry it currently dominates? This shift signals a high-stakes pivot in how the organization expects to generate future revenue. To understand the valuation, we have to look at the total addressable market, or TAM, the theoretical maximum revenue a company could capture in its chosen sector. SpaceX's internal projections claim a market opportunity of $28.5 trillion. To put that in perspective, that is roughly the size of the entire U.S. economy. Only a small percentage of that $28 trillion figure actually comes from launching rockets or providing satellite internet. The vast majority of the projection relies on building a global footprint for AI and data infrastructure. Maintaining that lead is expensive. Following a merger with xAI, the company began spending millions of dollars per day on new data centers to keep pace with the rest of the industry. The successful rocket business is currently providing the capital to support an unproven AI venture that is losing significant amounts of cash every day. The long-term vision for this infrastructure involves moving high-performance AI data centers directly into orbit. This would require a network of millions of satellites acting as a single, space-based supercomputer. This plan faces a massive hurdle in heat management. On Earth, data centers require massive cooling systems, but in the vacuum of space, dissipating heat generated by AI processors is a significant engineering challenge. There is also the threat of solar radiation. Without the Earth's magnetic field for protection, high-energy particles can easily corrupt data or permanently damage sensitive silicon hardware. Logistically, AI hardware often becomes obsolete in less than 2 years. That is a much faster cycle than the time it takes to build, launch, and deploy new satellite clusters. Forcing power-hungry technology into the vacuum of space represents a massive, unproven engineering gamble. When the IPO launched, the market reacted with immediate intensity. Driven by the hype around AI, the company's valuation reached into the trillions within hours. Major financial indices were more hesitant. Several institutions delayed including the stock in their portfolios because the company had not yet reached consistent profitability. Despite that caution, millions of retail investors are now indirectly funding the daily cash burn of the AI division through partial index exposure. Under this new business model, rockets function as transport systems for the primary asset, AI infrastructure. Investors following the hype are buying a volatile tech sector rather than an established aerospace monopoly. Historically, this leadership has successfully overcome engineering odds that experts considered impossible. However, the IPO filings show that the company's current identity is centered more on data centers than on deep space exploration. Assessing the true risk of a modern investment requires looking past the physical hardware and instead following the private paperwork. Because in today's market, the most spectacular stories are often the ones used to obscure the most significant financial risks.